Hello and welcome to the Extraordinary Retirement Podcast with your hosts, Gregg Indovina and Nate Yeomans. I'm Wendy McConnell. Hi guys, how you doing?
We're doing
Fantastic. How are
well.
you, Wendy?
Good. Feeling a little spring. Feeling like you
Yes,
can almost call it spring, right?
Just getting teased a
almost.
little bit. Getting teased
Getting in, yeah, getting there. We're getting there little by little.
little
Uh,
by little.
so what's on the agenda for today?
We got a pretty important topic today, as always, but how do you pick the right financial advisor?
Mm,
Ooh,
How about
interesting.
that's
that?
right. That's
Like it.
right.
All right.
Yeah,
So
So
if you
it's
think
not
of
it's not if you should have a financial advisor. It's how do you pick the right one
yeah,
and making sure that they're matching up with the stage of life you're in, et cetera. So we're going to go through all those details.
all right, sounds good. Let's get started.
let's do it. So one of the things that Nate and I talk about is people need to be empowered to make good decisions. And having some education around the world of advisors and what's out there uh, allows people to, for those that are inclined to look to have a relationship with a financial professional, to ask the right questions and get good results. So I guess we should start with the different types of people out there that may go out to seek this type of relationship. The first is the old do-it-yourselfer, the person that actually likes doing their own planning, likes their own investing. And you might think that that person doesn't really have a need for a relationship with a financial advisor, but it could be just they want to come in and meet with somebody to just run their ideas, their existing plan by a financial professional, just to get an idea to see whether or not they're on track. The second type of person is somebody that has a bit of an inkling as to how to put a plan together and understands investments, but they're really looking for a relationship to collaborate with somebody, right? They don't want to just hand it all over. They don't want to do it themselves. They're somewhere in the middle, and we call those collaborators. And then the final people are the ones just like, this is not my area of expertise. Wendy, you probably shaking your head now.
Well,
This
that's
is
me.
not my area. I just want to turn it all over. Um, and so those are the three types of people out
That
there.
person's
Nate,
a delegator,
yeah,
right?
those
They're
are
gonna
they're gonna
delegate that task out.
yep, absolutely. Um, so Nate, thoughts on those three different types of people? We see them all the time, by the
Well,
way.
I think the big thing is where you're going with this, Greg, is that when you're deciding to hire a financial advisor, or maybe, and quite candidly, 9 out of 10 people that we meet with already have a financial advisor. Sometimes they're just trying to figure out, is this the right fit? So whether you're trying to hire one for the first time or you're starting to wonder, okay, is this the right advisor for me? I think it starts with understanding who you are as a person, right? So if you're the do-it-yourselfer and you like to do all the the trading, you like to do all the research, you're very involved in that, you're probably not going to want to work with an advisor that basically says, I'm going to take all of that off your plate, because you're going to miss out on something you really enjoy. Versus somebody that is a true delegator that wants to have them do all the work. And you work with an advisor that says, here's a plan. You go out and pull all the strings on the plan. That's probably not going to work for you either. And so understanding who you are, the type of person you are, is going to help make sure that you match yourself up with the right type of advisor. And so that's where it starts. But then we also have to look at, the next thing would be, is what phase of life are you in? We've talked about this in previous episodes, but real quickly, the three financial phases of life are the accumulation phase of life. And then as you get about 10 years or so from retirement, you're in the retirement risk zone, right? You're running out of time. So you gotta protect, but you also still got to grow your money. And then you get into the income distribution phase of life, to where you're actually taking money out of your portfolio for the first time. Here's what's so important to know is, during these different phases of life, there are different types of advisors with specialties for each of those phases. So it's very much like a doctor. When you're young, you go and start seeing a pediatrician, right? Your kids are seeing pediatricians. And then as we get older, and we start to have different levels of needs as an adult, we start to seek out specialists. So if we have a heart condition, we're not going to go to the pediatrician to help us with a heart condition. We're going to seek out a cardiologist.
Nate, is
And
this when
so
you throw in that Greg's looking for a gerontologist? Is that when you could throw that piece in?
Well, you are significantly older than me, so that could be the case. So
I'm in that transition into the. Now
I'm glad we can
I
laugh
remember
about that.
when my daughter turned 18 or 20, whatever it was, and we got rid of the pediatrician. It was kind of a weird thing. Like, oh, okay, we no longer need to worry about those things. We got different issues to deal with, and
Right.
yeah. So that's a good analogy.
Yeah. So, at the end of the day, it's just about making sure they match up. Now, here's what we see all the time, is that somebody comes in that we typically are meeting with somebody that is 10 years from retirement or already retired, and that those kind of 8 phases of life. And we look at what they're doing from a financial perspective, and maybe even the plan that they have, or a lot of times a lack of a plan. And it's very accumulation focused.
Mm.
Right. And it doesn't mean that their advisor's a bad person or anything, but they're an accumulation expert. There's actually financial firms out there that, and I'm glad they're transparent about it. They'll literally say, when you're in the distribution phase of your life, we are not the right firm for you. We are a growth firm. We are focused on growing your money. Okay. And so they realize the area that they fit in. Well, a lot of times advisors are accumulation focused and don't necessarily specialize in the transitions that people make as they enter into the retirement risk zone or the income distribution phase of life. And so a lot of times we find that clients are working with somebody or interviewing somebody that is accumulation focused and not at the stage of life that they're in. Greg, what are some of the conversations that, if somebody's listening to this right now, and let's say that they're either working with an advisor or interviewing an advisor, what would be some of the things that would maybe tip you off to think, okay, that's probably a growth oriented or an accumulation oriented type of advisor? How do you think those conversations are going?
Yeah, the conversations are mainly around investment performance would be the first thing.
Yep.
It would be around dollar cost averaging, savings plans, maybe setting up 529 plans for young children, those types of things. But it is not, and those are certainly important things to understand, and getting the right portfolio for risk tolerance, et cetera. Those are not as complex of issues to solve as someone that focuses on approaching retirement and actually in retirement. And the other thing, this is probably the biggest thing, the difference is the consequences are much, much bigger.
Yeah.
Right. You can make mistakes during the accumulation phase, and time can solve a lot of those problems. Not the case as you approach retirement. So finding somebody that is really trained and specialized in the distribution phase of life and all of the complexities, and we'll talk about that here in a bit, is super important. But before we do that, let's talk about just the world of advisors. If you're going to hire someone to do your taxes, it's pretty straightforward, right? Pretty much everybody, you go in, you interview them, and they do your taxes, and it's pretty straightforward. The world of financial advice is just very, very complicated. The first thing to look at, and these are, if you want to take notes about the types of questions to ask to make sure you're on the right path to finding somebody that is congruent with what you're trying to accomplish, is what's their licensing, right?
Mm-hmm.
So there are a lot of people that are licensed to help with investments. And then there's a lot of people that are just strictly licensed to do insurance planning. And they'll both put themselves out there as financial advisors, but they have very different toolkits that they can work from. The third category is someone that is actually licensed and understands both of those worlds, because there's a place for insurance in certain cases, and there's a place for investments in certain cases. So that's the first thing to really understand is someone's licensing. Nate, what about the second one? This is kind of a big one too.
Yeah, I think that's where we get into the standard of care.
Yep.
And that really revolves around, are you working with a fiduciary? This is so important. Are you working with somebody that is truly obligated to look out for your best interests? That they can't do anything that's self-serving. They can't have conflicts of interest. Are they really there planning and helping you no matter what your needs are, investment-based, insurance-based, planning, et cetera, that are truly acting in a fiduciary capacity so that you know that somebody is making recommendations not because they're incentivized to make those recommendations. It's because they truly are helping you based on your current situation. So, you
So
have a
in the
question?
world, just as an example, Wendy, hold that thought. Just as an example, somebody that's in the brokerage world, their standard of care is that any recommendations they make, the only standard is that the recommendations have to be suitable, meaning that somebody is looking at their age and their risk tolerance, but it doesn't necessarily, this is crazy to say, it doesn't necessarily have to be in their best interest, as long as
Yeah, I
it's a
mean,
suitable recommendation.
yeah,
That's
there's
frightening.
thousands and thousands of mutual funds and things out there. And a lot of times we say, how many of those are suitable? Well, there's a lot that would technically, because of maybe your risk tolerance, that would be considered suitable. But if we ask the question, how many of those are in your best interest?
Yeah.
That becomes a very different answer. So,
Yeah,
Wendy,
Wendy,
you had a
sorry.
question.
Yeah, you had a question.
I'm wondering how that is governed. I mean, you can tell me that you're a fiduciary, but how do I know that you're acting in my best interest? Who is, keeping track of that?
Those
Yeah,
are the
that's a good question.
regulators. Those are the
Yep.
regulators. Yeah. So if the Securities and Exchange Commission comes in to do an evaluation of a firm and a financial advisor, they look at the types of recommendations and the documentation that you've made. And I'll give you an example. If an advisor is making money off of an investment account, and the client has the question of, I'm thinking of paying off my mortgage, should I pay it off or not, and I want to use these investments that the financial advisor, being paid for. Well, the self-serving thing would be, no, don't pay off your mortgage because that's going to cut into my compensation. The fiduciary responsibility or bar would say, what is actually the best solution? It might be, yeah, drain that account because has a more positive impact on the financial plan.
Okay.
Yeah. So essentially, the question that somebody would want to ask is, first and foremost, are you a fiduciary? And what license do you hold that requires you to be a fiduciary? So those are the things that they're going to want to ask. And then the regulatory bodies are going to be the ones that would enforce that individual to hold up their fiduciary duty. And if they don't, you could lose your license. So that would obviously not
And
be a good thing.
be
So,
fined and all kinds of
yeah. Yeah.
unpleasantries.
So that's an important piece to know. And, I couldn't recommend working with a fiduciary high enough. And I think it's just absolutely the standard of care that you need to be working with. But when it comes to other types of advisors, there's also different ways advisors get paid, right, Greg?
Yeah. And let me say one fun thing. Just because someone is a fiduciary and by law has to be acting in your best interest doesn't automatically make them a good person. Right? People that have those standards can still act in unsavory ways, and people that have lesser standards can act in good ways. But as a starting point, a fiduciary is the first checkbox.
That's right.
So how
What?
people get paid? Let's go into that.
So
Important to understand for sure.
yeah. So in the world of the advisory world, if you will, there's different ways that advisors get compensated. Some advisors get compensated by the investments that they provide. So they might manage and oversee the investments and charge a fee for that. Or it could be a commission based approach with selling certain types of investments. Others are just planning fees only, to where maybe they just charge fees for a plan. And then you might have some that charge an hourly fee. more like a CPA or something like that, that would, basically say, well, I'm going to charge you X amount of per hour for doing the planning work, et cetera. And then finally, you have some that are fee only, to where they're not going to charge for investments separate from planning. They're just going to say, we're going to charge a flat fee. And so you kind of got these different approaches to how firms and advisors can collect fees. Sometimes it's commissions, sometimes it's flat planning fees, sometimes it's based on the assets that they're managing for you, and a lot of times it's a hybrid approach as well. And so understanding how they charge fees, and if you're going to pay a fee for something, you want to make sure you know what value are you getting in return to make sure that it matches up. And so let me use an example, is that if you're somebody that is really truly looking for good detailed financial planning, especially during the phases of life to where you're getting close to retired or in retirement, to where you really need to pay attention to the details and get all that high level planning done, but all you're getting and you're paying for is management of investments, you might be paying a pretty high fee, but not getting the planning that you're looking for. You're getting the investment piece, but you're missing out on one other side of the coin, if you will. And so understanding what kind of fees you're paying, but also what are you really getting in return for those fees, is going to be important to make sure you're matching yourself up with the right advisor. Because if you don't value planning, you might just need somebody to help with some investments. And so that's going to be important as you evaluate current advisors or future advisors.
So as you see all these different variables, just walking into somebody's office that says they're a financial advisor or a whatever term they're using, you really have no idea about any of these things unless you ask the questions and unless you're empowered and educated to ask those questions. That's the important part.
Yeah.
So Nate, what do you and what?
Well, I was going to say, anytime you're going to pay a fee, you're going to want to know, what am I getting in return for value?
Yeah.
So maybe you want to talk a little bit about the different ways that we bring value in a relationship with an individual. What are some of those ways that and things that can be done to help bring value into a relationship?
Yeah, typically the three areas that a financial advisor should provide value, and they certainly don't, and these are, once again, questions about asking, do they do these things? There's three areas: the personal side, the planning side, and the portfolio side. And there's a lot of different sub things underneath. So let's dive into personal. The personal really is, a lot of people talk about having a personal CFO. No, is it CFO? Chief Financial Officer for their family, right? That's one way to look at it. But helping a family navigate their financial life through the lens of their personal goals and things that they're trying to accomplish. Because a relationship with a financial advisor shouldn't just be about finances. It should be about all the things that the finances are hopefully funding in your lifestyle to help create an extraordinary life and maximize lifetime fulfillment and all the things we like to talk about. So some of those things are just goal identification. Is the advisor going to sit down and spend time with you and your family to really figure out what's important to you, what you want to do, what you want your money to provide for you and for legacy and all those kind of things? The other one is behavioral.
Hey, Greg, can I stop right there real quick though?
Sure.
Because this is important.
It's a big one. Yeah,
how many times have we sat down with somebody and started to get to know them and ask a few questions? Said, what are you doing for your investments? What kind of plan do you have? And we start asking them about your goals. In your plan, how are you going to achieve those goals? Isn't it amazing how quick the conversation starts to change?
Yeah.
That most people don't have in whatever plan that is being provided for them, identifiable goals with a plan to accomplish them. It's amazing how many times the conversation starts to break down right there, because they can't answer the question of, well, I have goals, but I have no idea how my plan's going to accomplish those goals and what money that I've saved that I'm going to utilize to accomplish those goals. Okay. I bring that up because that's going to point out a stark difference between maybe somebody that's working with an accumulation specialist versus somebody that truly understands the dynamics of those that are getting close to retirement or already retired, because we got to get a lot more focused on identifying goals and how we're going to get those goals accomplished.
Yeah,
Okay.
and Nate,
Keep going, Greg. So,
it's not just about an advisor saying, what trips do you want to take over the next 10
Right.
years? That
Right.
It's about pulling those deep emotional things that really causes them to value life, helping pull those things out. And a lot of times the client doesn't even know that they have these desires until a good practitioner helps pull those things out. So that's the other skill set, not just asking, but probing and digging and questioning and challenging and all those things to really get a list of what's important for them.
absolutely.
Nate, you want to talk about the coaching part, the behavioral side?
Yeah. So here's the other thing that behavioral coaching. All right. We're all emotional beings, myself included, Greg, right? We're all emotional beings, especially when it comes to your money and the most amount of money you've saved in your entire life and you're trying to retire, et cetera. And so we can be emotional about it. And guess what? Markets go up and markets go down. And the real value of a financial advisor is to really come alongside you and provide behavioral coaching as well, because we are very, very good at getting out of the market at the wrong time and getting back in at the wrong time, right? Because we're letting emotion drive those decisions. And
Selling low and buying high is not the equation for building wealth, Wendy. Just, you want to write that down?
I did. Thank
Okay.
you.
Yep.
Appreciate it.
And the
So-
market is famous for playing on your emotions of fear and greed. Fear causing you to sell and greed causing you to buy at the exact wrong time.
Yeah. So part of our job, there's two things there. It's not just, oh, just hang in there, it'll be fine. There are some aspects to that, but it's also first making sure that you're actually have a financial plan that's designed for you and your emotions, right? Understanding who you are and your preferences around taking risk, not just filling out a questionnaire and you get stuck in a box and then it's like, hey, write it out. Let's understand your preferences around risk, because then we can really cater a financial plan and an investment plan to something you really truly believe in, so that when times do get a little challenging, which they will, you're going to be emotionally more prepared to handle that. And then we're going to be there alongside at the same time, coaching you through that to remind you of why it's important to stick to the plan.
And those
How else-
those emotional mistakes that every and there's study after study that shows this, that it costs them several percentage points each and every year. Those are quantifiable numbers too. This isn't just pie in the sky stuff. That it's very quantifiable as to what that coaching is worth. And the final thing under the value, the personal stuff, is just having that a client and that an advisor should be able to impart confidence and peace of mind that they're on track. And we meet with people every day. Nate, we met with one this morning, just complete lack of confidence in their future. And it's because they haven't had the coaching, they haven't had the planning, they haven't all the things that we talk about. So let's dive into the planning.
In a world where we want to live an extraordinary retirement, how can you do that without confidence? It's not going to happen. You're going to be second guessing everything. And it's so sad when we see that happen. So it's so important. But that kind of leads into some of the planning topics around value. And one of those big things, Greg, is all about visibility. I mean,
So
if you can't have a financial plan, it's one thing for us to talk through financial plans and to talk about numbers and returns and other types of things. Do you have the ability to actually see it happening? Do you have the ability to look at your financial plan, understand what goals are there and how you're going to accomplish those goals, and then all the different assumptions and risk factors that might come into play. When you start to be able to visualize and see your retirement come to life, again, that's going to instill confidence, and you've got to be using the appropriate tools to help you do that.
And just imagine the typical person that is, doesn't have expertise in this area and isn't working with somebody. They're 62, their goal is to retire at 65, and they have no idea whether or not it's going to work. And you only get one shot at this. So not having the visibility is very, very critical. And having that visibility is a huge value. The other thing with the financial plan is that a financial plan is not a one-time static document, right? So the next thing under planning in terms of value is, let's get a plan that is on track for now, but then life happens, markets go up, markets go down, et cetera, life changes. How do we keep the plan on track, right? That is super critical, not just a one-time plan, which is what we see a lot of today as well.
Yeah, a lot of times we think that we're just going to live in this Goldilocks scenario, that even if the plan looks good today, that everything is going to go perfect. But do you have a way of making sure that you know and understand when things are not going the way that we originally intended? It's not if those things happen, it's when, and what the heck are you going to do about it? And so are there things that we can do to start pulling different, what we call financial levers, to start to course correct and bring you back? You don't want to wait until you find out it's a problem, which is too late. We want to identify that we're heading down the wrong track. It's not a problem yet, but it could be one if you keep going down this path. So how do we course correct? And that becomes incredibly important.
And those are all the questions. And these are questions that need, if you're interviewing a financial advisor, you need to ask those questions. Is this going to provide me the visibility to make good decisions today? How are you going to let me know when my plan gets off track? And then what are the things that we can do to get it back on track? And am I going to have the confidence to go out and live that life that I deserve to have? Those are the questions under the planning side. And super important. The final one is the portfolio, the value that a financial advisor can provide with the portfolio. And it really starts with optimization. Building a portfolio that is what we like to say is truly diversified, with multiple philosophical approaches to managing assets, making sure that you have different hedging techniques built in there that are diversified, getting exposure to more than just stocks, bonds, and cash, but a lot of the other asset classes out there. Super duper important to get an optimized portfolio, and to make sure that optimized, truly diversified portfolio is appropriate for the stage of life that you're in. Right? Most people that we see come in and they're looking to retire, and they have a portfolio that was designed for the accumulation phase of the life, and they never made that transition into, okay, how do I turn this money into an income stream that I can never outlive? Now, you want to talk about rebalancing and those kind of things too?
I mean, I think that, is your plan on a path to where it's making appropriate changes at the right time and needing to appropriately rebalance, not only to, help you stay within your risk tolerance, but also to manage risk appropriately. And so, making sure that we're also keeping in mind taxes.
Yeah.
Eventually down the road, when you're going to have to start taking income, you're going to want to know, what are my tax implications? And so, again, a good financial plan is going to encompass all of these things, and the right type of advisor at that stage of life is going to specialize in being able to deliver those things for you. These are not things that you should have to be asking for. These are things that should be being proactively provided to you. And again, that might be distinguishing the difference between the types of advisors, because if we're very accumulated oriented, and that's what our specialty is, we're going to be very focused on how much growth did we get. But we a lot of times don't have the expertise. Doesn't make them a bad person. It just means they specialize in something different. Is there expertise in understanding how to make sure that you're personally prepared to be retired and excited about it and have the confidence? Do you have the full visibility of the financial plan And do you have the portfolio that is truly optimized and understand how taxes impact you and income is going to be provided for you in retirement, all of those things. That's where it comes down to the nitty gritty details at probably the most important time in your life.
Yeah. What portfolios do you have in which accounts? And is that tax efficient? Which portfolios do you begin to draw income from first? And which ones do you want to protect over the long run? Once again, these are all the kinds of questions that will help parse out whether or not an investment advisor or a financial advisor is the right one for you. So we've gone through a lot of different things here, Nate.
I think the goal here, Greg, would be is that if this is something that you're really trying to figure out, making sure you're asking the right questions and getting matched up with the right advisor is going to be so important. Because honestly, you don't want to have to keep switching advisors trying to find the right one. And so a lot of times we try to make sure that are you asking the right questions and lining yourself up for success. And even, by the way, if you're one of those do-it-yourselfers that you say, right now, I don't need a financial advisor, and we would never want to take that away from somebody if they really, really love doing it. It's probably not a great fit. But what about your spouse? Are they a do-it-yourselfer? And what if something happens to you? So what's the importance of not only for the main individual that a lot of times is driving the financial conversation, but it is so imperative to have the spouse included in all of this, because unfortunately life happens. And if you lose a spouse and the other one has no idea what's going on or what to do or who to talk to, that can become very problematic. And so I think that action is, action is the big key here, though. Take action, start having conversations, start asking good questions to help yourself find the right advisor that is really going to help you and the rest of your family navigate retirement so that you can focus on living life and enjoying it and doing it in an extraordinary way.
Yeah. And you also can't overlook the personality issue of I'm looking for an advisor that, I want them to be competent for sure. That's a given, but are they warm? Do I connect with them? Do I feel comfortable with them to share my life story and where I want it to go? So there's that aspect that is more of a qualitative evaluation factor as well.
Okay.
All right, Wendy, that's a lot.
It is a lot. And I was, really what I was thinking is, does Greg have a personality? But
I have it's just not a good one, right?
He loves when we bust on him a little bit. He's a very good.
I have thick skin, and self-deprecation is my favorite form of humor because I have a lot of material to work with.
Yes.
Yeah, we can learn to laugh at each other around here. That's for sure.
So how do people get in touch with you if they have questions?
The best way is going to be to go to our website, designwealthadvisors.com. A lot of information you can learn about us, including our retirement class schedule and our podcast as well. And that'd be the best place to start. Or you can call the office at 720-833-7676.
All right. Sounds good, guys. Thank you. And thank you for listening today. Please follow, and share this podcast with your friends. Until next time, I'm Wendy McConnell.